welcome late. Hey, how are you? All right, this is my brief bio. Disclosures are important. This is the first time you either watch the recording or participate live. Please visit optionscreening.com to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, let's jump into the market. We're waiting for the Fed decision. It looks like market likes it, right? People were concerned about the dovish tone in the hawkish tone. Sorry, they were concerned about hawkish tone, that we're going to be data dependent, and there are signs that employment market is cooling and GDP is going to be lower. But for the most part, sounded dovish. One thing that I did kind of was surprised that they only projected one rate cut next year, where the expectation was 2 to 3. And at least as of right now, people kind of think they're concentrating more on the fact that overall Powell was upbeat about the economy and future wage growth, wage growth, efficiency and wage growth, efficiency, and inflation, continue to go in the right direction. Right, next year I think they were targeting PC of 2.5, right, and then following to 2.0. So inflation is going in the right direction. Employment, according to Powell, is stable, I think the biggest one was dissent, right? At least one of the market commentators mentioned that if there's a dissent in the committee and it's divided, it'll be harder to pass, Trump's agenda of lower interest rates. But since dissent was only 3 people, where they were concerned there would be 5 or more people, then everybody's projecting that once the new chair comes in, then they'll have more than one interest rate cut. Because I assume if it's only one interest rate cut, market is not going to like that. But okay. But first thing first, yield is down, at least as of right now, right? I would let it dust settle. Dollar is down, high yield is up, VIX is up. Interesting value stocks and small caps, right? Interest sensitive stocks like regional banks, small caps, equal weighted S&P in general, all breaking out to the upside, right? So that's positive and that's bullish for the market. QQQ for now lagging. We'll see how far it's going to lag, how long. Usually these divergences don't last that long, but it's been, probably, I don't know, at least for a few weeks, I would say that, small caps 50-day moving average, November 25th. QQQ 50-day moving average, November 25th. I mean, I think small caps are definitely start showing more, making new all-time highs where QQQ is not. That's the bottom line. And same as regional banks, right? And same with silver, right? Gold. These are all interest-sensitive sectors. China is going higher. That's good. Bitcoin is also underperforming, right? So Bitcoin is underperforming. Mega cap technology stocks are underperforming, right? If you look at Google, NVIDIA is negative, right? NVIDIA is down, Meta is down, Microsoft is down, right? Tesla is higher. So Tesla is still doing well, but not making new highs. Apple is, uptrend, but not making new highs. Amazon is, lagging behind Google, close to all-time high, but not. But you make it. The new highs are Morgan Stanley, right? We talk about financial sector and investment banks. I think today was the Citigroup, if I'm not mistaken. Let's see. What did model detected before Powell's speech, right? I like to always look at before the events. Citigroup, right? So Citigroup was breaking out, right? The model detected that even going into the event, banks are outperforming. Cisco is one of the stronger. This is more telecommunication, right? Not just pure tech name. And then TJX, right? They all kind of modeled, did a great job detecting all the stocks that, respond better than the rest of the industry or sectors to the, at least for now, positive reaction to the, give me 1 second, to the interest rate decision. All right. So that's good. Going into an event, model was neutral. I haven't looked. Let's see what the model thinks. Yeah, it's still neutral before the announcement. Basically saying that by Christmas, New Year, 700, right? That SPX is approaching 700. The model is right. We are at 6,900. There's not a lot of overhead resistance at 6,900. It's not going to have a hard time breaking through this level. 7,000 is, going to be a lot harder for the market to break through the 7,000 level. So I would consider at least thinking about trimming some of your positions, because as you can see, there is enormous amount of, not enormous, but most of the contracts are concentrated at the 7,000. This has been a December 19 contract. So at least until December 19, I think market is going to have a hard time breaking through the 7,000. After option December expiration, and assuming unemployment data next week kind of confirms to Powell's opinion on the market, okay, then the floor is open, right? The floor is open to 7,500, maybe by I think model said 7,500 by in the next 6 months, if I'm not mistaken. Yep, 70.50, right? 750. I mean, bullish case, right? It's not a base case scenario, but it is a bullish case. If no other, black swan events. Okay. Okay, let's go over. So I think there was some. I did get fill on something. Caterpillar, I think. Let's see. Okay, so Caterpillar sold. This was the not premium, paid. So I think Ted, Fred, you guys both paid. Hopefully you got the text message, not the email. But I did sell 587, 585 put for 70 cents. Looks like, as of right now, we still have time, but it's doing well. I put in order to try to close it for 5 cents. Broadcom yesterday before the close, I trimmed at 406. It's trading at 411. Broadcom has earnings. I do have a Broadcom position, so I'm inclined to actually close Broadcom as well, just the stock, and leave the option, because this is a pretty concentrated position. So let's do that. I mean, it's up 2%, 2.5% in a short period of time. So I'm inclined to trim it, not take earnings risk, right? Why would I take earnings risk when I already have option exposure? Okay. So still bullish on Broadcom, but again, I don't know what's going to happen during earnings. And we can look at how people are. Let's see how people are super bullish on Broadcom. I assume they are. Let's see put call rate. Let's see expected call rate. Put call ratio. Let's look at the bias. I mean, the good news, we are above 400, right? We've seen a lot of position at 400, and it's day 1, day 2, day 3 above 400, so it looks like confirmed. You definitely don't see as much enthusiasm, right, about these semiconductor earnings as we had before. Right? There's now no 3-to-1 or 2-to-1 or anything like that. It's pretty even. I mean, slightly bullish here, slightly bullish here, but nothing to brag about. And actually, in January, it's the other way around. More puts than calls. Okay, so Broadcom, it's a flip of a coin, right? And the expected move is, I mean, it's been moving 11% on average historically, and expected move is about 10%. So negative news, and it's 373.80. That's the spread that I have, 373.80 spread. So if it doesn't meet expectations of the market participants, then we could get below 380, right? Then this spread would be in trouble. Okay. Any questions? All right, so Broadcom, I'm out of the stock, still have an option position. So that's good. Okay. So let's send the alert. So you should get a text message. Brad is back. All right, Brad, miss you. Paid. All right, so let's send email. So while I'm sending an email, you guys can look. So I did close Broadcom stock position, right? About 2% profit. Caterpillar, but I left the option. The option is still here. So I do have option spread for $380, $390 call. And it's trading. If you don't want to take earnings risk, let's see, 380, 390 is Broadcom. Now it's trading about 670, and only 10% up. I mean, but you know. Okay, so let's see. So I trimmed. Sorry. Okay. So for those of you who just joined, some of you just joined now. So I'm out of Broadcom stock. Still have an option spread. I still have option spread on Caterpillar, the credit put spread from yesterday, and I do have half of the stock position. So still have the other half of the Caterpillar position. It's almost at that. The second half trigger as well. All right, so let me write that. Let me send the email. While I'm writing email, you guys let me know if you have any questions. All right, and now graphics accelerator. Yeah. All right, let's do the earnings. We have half an hour left. All right, so we do have Oracle, right? We talked about Oracle, so let's do Oracle plus trade. So SPX gamma hasn't changed, right? 6,700 now, it's close to 6,800. But 6,700, I'm bullish. That's 50-day moving average, and 7,000, I would trim the position. I don't know if you market. I mean, I guess if unemployment is steady and no surprises next week in the unemployment, then we could breach 7,000. But probably not till expiration. There's just a lot of contracts at 7,000. So I think this market is going to have a hard time breaking this, before the Christmas. Maybe after December 19, right before Christmas or after Christmas, maybe. So maybe it makes sense to trim some of your positions. Okay. Let's look at Oracle. So widely anticipated earnings, right? Last time it was kind of this, I don't know how many standard deviation it is, 5, 10 standard deviation move, 40, 30%, 40% up, and then 40% down, kind of on the fear of, again, that they're going to have potentially negative cash flow in the next few quarters because they're borrowing and issuing a lot of debt, and their swaps on their credit has been, at 2008 level, right, at the global financial crisis. So a lot of people are watching the earnings and their balance sheet, their cash flow, and investment into the AI data centers versus how much revenue they're making. And you can see that theme across all AI stocks. Meta is in the same camp. Meta, Microsoft are in the same camp. 250 strike is where the highest concentration. Right after after the estimated move of about 10%. Right? I mean, obviously it doesn't move 30% every time, but usually it moves 10%. So that's 250 strike, and the put wall is 200. So you have 200, 250 range. Right? 200, 250 range. Let's see. So obviously that's an outlier, but the average move has been 50%, maybe 6% to the downside, 13% to the upside, right? Expected moves about that 10, 11%. And people are positioned probably not as enthusiastic as last time. Last time we had a pretty big, actually, oh no, I'll take it back. Okay, so I guess, so yeah, so still, almost 2 to 1. This week, monthlies, and actually January expiration, all bullish bias. Only in March people are kind of hedging with the reverse, slightly more puts. So I'm inclined to sell. Well, definitely don't want to sell call spread in case we have a repeat of last, move, or even before that. So I'm inclined to sell the put spread and finance it, and then either butterfly or debit call spread, something like that. So let's look at the prices. So in probably I do 195, 192.50. So there's a lot of premium in the Oracle options. So people think it's going to be more than 10% move to the upside and to the downside. So vertical 2.5 all. Let's see. So 295, 292.5, I can sell it for 34 cents. So next level will be 190. So right between 194. I mean, if you want more, take a little bit more risk, maybe 197.5, 195. Let me do this. So 195, 197.5, right below the 200 line. You can sell it for 40 cents, 43 cents. Nope. Doesn't want to get filled. Okay, 40 cents. So I was able to get for 40 cents. So sold for 40 cents. 197.5, 195 was the idea that it's not going to move, beyond 10%, right? Stays 10% less, then I keep the profit, and if not, if it goes below 190, that's when I'm going to start losing money. I mean, you do have a lot of bullish positioning in January, December expiration. Let's see, how's it today? Look at real-time data. It's weekly options. So you have a lot of position in actually 190 strike, more than 200. So a lot of somebody's selling a lot of contracts or buying a lot of contracts at 190. So there's just a lot of premium. You can see there's a lot of premium in these spreads. Okay. So on the upside, let's see who's buying what. Where's the largest concentration? 200. So 200, a lot more, and 215. So you have 200, 215. Sorry, 215. See 250. Yeah, so 250. So sorry, so 230. There's a lot of concentration at 230, but that's close. So most of them, people open interest is at 250 strike, and you see 26,000 contracts traded just at 250 strike today. So somebody wants the stock to get to 250. So if you buy 50 by 260, well, that's expensive, right? $6.80. No, sorry, 250. Round strike 250. So if you buy 250, 260 strike is $1.42. So you can, risk $1.41 to make, potentially $7, $8. Maybe that's what I'm going to do. Since a lot of people are trading. Maybe Oracle will hit a home run again. All right, so vertical. We're going to go $10 strikes. Let's see, what is it in the monthly expiration? Maybe I should just go to monthly. It's not too much. Yeah, 250 to 60 next week. So this is $1.40, this is $1.60. I mean, it makes sense to maybe spend a little bit more. $1.65. 12.1 limit. Was $1.60? Let's see, $1.60. $1.65. Still no. Okay. How about $1.70? $1.70, yeah, good, good. Okay. Okay, so kind of don't want to trade against the crowd. I don't have a contrarian opinion, so I'll just go with the crowd, with everybody. So 250 to 60 call. I mean, it has to move 10%, right? So it does have to move 10% by next week. I did go into next week. Give myself a little bit more time. So sold the put spread 40 cents. So if it doesn't, if it doesn't break below 197, right? If it doesn't break 97, then I keep the 40%, and then I'm, $1.30, right? So my maximum loss is not maximum, but my loss is maximum loss is $1.30 if it's above 197, and then potentially maximum loss if it drops to 195 or below, then it would be, $2.10 plus $1.70. So it'll be $4.10 loss. If you want to reduce the risk, you can sell 270 call, right? With the idea that, last time was an anomaly and we're not going to go to 270, right? It doesn't look like a lot of people trading on that level. But on the other hand, you do have a very large concentration at 300. So, you could have that pull effect. I don't think it's going to move 30% again, but who knows? Who knows? The chart looks overdone, right? It's kind of the same, almost the same setup as last time. Yeah, it's at the same level as last time. So, who knows? We'll see. You can see markets, QQQ is still underperforming. Or is it catching up? But it's catching up. Okay, so 0.5%, 80 basis points. Small caps is 1.5%. Okay, so it's more or less stabilized. Still, value stocks are outperforming the QQQ, but it's doing a little bit better. All right, UNH, let's go. Okay, Brad, Fade. Brad, welcome back. Thank you for joining. Ted, John, Patrick. All right. What else we have? And I think we do have something else. Broadcom, Adobe. We do have Adobe. Okay, so Oracle is doing after the close on 12.10, and Adobe, I think, is the same. So Adobe has been underperformed, right? They're behind the AI curveball. Figma, right, is eating their, I mean, Adobe is just very expensive software for design. I mean, they do a lot of things, but predominantly, I think that's a lot of their revenue comes from these design tool suites. And they're supposed to make, AI and blah, 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 but they have Figma now. And if everybody used to use Adobe in software development on the front end design, now everybody's using Figma. So Adobe just can't catch a break, right? They just can't catch a break. And it does not look good. I mean, maybe they have something in the pipeline that will shift the equilibrium, but I don't know. I haven't seen any Adobe mock-ups for a very long time, where I do see Figma, and it's reflected in sentiment as well. So, I mean, slightly bullish in December. January also slightly bullish. I mean, okay. Expected move is about, 8%. 7, 8%, 9%. I mean, we had moves 13%. So when I see something set up where historical move is more than implied move, then let's see, where's the vol chart? Same kind of setup as last time, right? IV percentile, open interest. I mean, IV rank maybe a little bit. So implied volatility, historical IV rank and implied volatility. Implied volatility and IV rank a little bit lower than the last. So basically, you don't get enough premium in those put spread, and I don't want to take the risk. So I'm inclined to just sell a call spread. So expected move 370, right? So 370, 380. You have 400. Wow, a lot of position at 400 level. Okay, so I also need to be careful. That could also be a magnet, but let's see. Let's see what it pays to risk. Indeed, is horrible. Yeah. Definitely, you start seeing rotation, away from mega cap. So if anything, you want to be diversified, right? We used to be on these webinars, people only trade, high beta QQQ stocks. Well, how is high beta doing? Let's see. I gotta look at Bob's and Fred's favorite stocks. IRAN, right? IRAN is not going in the right direction. MP is not going in the INQ is not going in the right direction. Pelletier, there's news contracts with federal government. Okay, you have news contracts with federal government. You don't invest into infrastructure. You're just providing AI solutions for government. Okay, then Pelletier is up 4%. Firm. You can see all the high beta stocks mean, ARK is still kind of underperforming, right? So you can see shift away from high beta, shift away from mega cap technology names, and people are buying Caterpillar and Morgan Stanley, or VTV, they're buying 3,000 VTV, I think 3,000 stocks. Okay. I mean, 2-year leaps fade, yeah, that's a little bit different strategy. I mean, all they need is, it is so bearish, right, that they just need one thing to do right, right? And then, yes, all, content creation will create all boats, lift all boats. It is possible. But short term, I mean, that it has to have multiple earnings cycles where they're up 10%. But let's see. I'm going to take the other side of that argument. So 400. I mean, 400 is actually 75 cents, which is crazy. Right? So you can sell 400 option, which would imply 15%. It's not that out of ordinary, I guess. 55, 56, 18, 17% move, but a lot of 400 level. Okay, so 400 to 402, and not enough premium. So I have to, it's probably 395, 397 and a half. 390, I might not do anything actually. 390, 392 and a half. Yeah, but just not, yeah. Yeah, I don't really want to sell put spread. I don't really be long calls, but short calls, there's not enough premium. That is the only problem. Okay, and then I guess no Adobe. Did it last time and it worked. I don't know what's the premium. Yeah, I guess just a lot less premium. Okay, so 380 strike, where is the? A lot of open interest 360, but that's very close. 380 volume. And 400, right? So 400. Open interest, not a lot of open interest. That's why it's options. Most of the premiums that near the money. Okay, so no Adobe. Anything else? Synopsis. I think doesn't have weekly options. What does it? Oh, it does have. What's the volume? Okay, S&P, yes. Okay, let's see. Package software. Pretty sharp move to the downside. About 6-7% move. Somebody's buying 550. again, it's been one-way trade, all to the downside. So upper range 530. $550. 500 to close. 550, is there anything? Yeah, it's all over the place. Let's see synapses. Should December more calls? Mostly bullish. Okay, what's the 500 trading? So highest volume, but not a lot of crowd. Open interest also high. The big ask 59.7. So sell this, buy this. Inverted quotes. Yeah, this is too wide of a quote. Inverted quotes. Okay, so synopsis is also not good for earnings. That's about it. What's tomorrow? Do you want to do anything tomorrow? CM, Mana, Manchester United. If anybody's interested, love sack. Okay. Because Manchester United has options. Wow, they actually have weekly options. Wow, that's crazy. $13 stack. Pretty wide bid. I mean, yeah, not liquid name. Okay. Okie dokie. So for now, we'll just stick with Oracle. All right, 301. How did we finish? SPX 6,900, right? So we're basically, what's the all-time high? So we're right at the all-time high, right? All-time high is like 68.82. So actually we made new all-time highs, 68.86. Around 6,900, right? We touched 6,900. That's your new record high. Next leg is 7,000. All right, that's all I have for today. Thank you very much. I will see you guys tomorrow after the close. Thank you. Keith will be on tomorrow morning. Thank you. Thank you, guys.